What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Sunday, March 5th, 2023. Um, I really awesome get to start out this week by showing some real interesting proof of concept. I was not able to trade this, just so you know. I tried a couple of things, but I didn't. I really wasn't successful here. I didn't lose money. I did stop out for about a $50 green day on Friday, but you can see here the proof of concept, especially going to the daily time frame. You can see that the slow stochastic came above, and this was really funny because it was only one line that came above 20, and you got this move. I was very hesitant to trade on this because both lines were not out. Okay. So at any point in time, yes, on Friday, the risk of this just heading back in the other direction, pulling back off of any other moving averages on any other time frame, really made this not a very feasible trade, which is sad because it was a nice big move, a lot of great opportunity it seemed like in there, but really as far as my setup goes, it just did not hit that criteria. Here, sorry about that. I'm reflecting my guitar into this thing. All right. So really not my setup as far as it goes, but again, a little bit of proof of concept here. I had a similar sort of setup on the 4 hour earlier that week. I did try and trade it. It was not my setup. And that one time on the 4 hour, you only had one line out and you wound up with the sell off. Here again, for most of the day, you only had the momentum line out of oversold. For most of the day, and then so again, I really was very hesitant to take a trade based on the daily time frame and based off of this move. Really not really not my step. A lot of the market moving ahead of the indicators this time, not really following buy signals. The other thing about it is not really, if we go to a shorter time frame on here, and again, this is just kind of an explanation of kind of what I was thinking about the whole time as I was watching this throughout the day. You can really see here, you get the gap up, you putz around with the gap fill, and then it's mostly just a grind up in that upward direction. There's not a real true pullback into any of this. You can see here, you never get truly oversold again. It really doesn't allow you another opportunity. So what this tells me is that there wasn't really traders trading this. There were some people gambling on it, some of that, and that you're more than likely just kind of into a grinding short covering situation here. And so I legitimately don't know what to I don't know what to do with this. Just so you know, any one of these, go long on any 0 DTE contract where you're taking a position size of 10 or greater, on any of these pullbacks, right? Even into this, on any of these pullbacks, you wind up making the same money twice, even though it trends in the same direction. And I've experienced this a lot in some moves where you're going up here and you sit in this thing all day long and you wind up making the same $400 or $500 that you normally would make by being there all day. It is kind of a colossal waste of time. And then on top of that, again, any indication that this is going to go back, any pullback back in this direction. I remember kind of late in the day, I took midday off. I do remember trying to get in on this one right here, and this is where I got my $50, and I'm fine with that. That was what it was. Again, going long into this, and this was off of a 1 minute time frame. We're over here on the 5. I'm not going to pull that up. Just really looking to get long into this, and you putzed around in here, and I wound up just stopping out for like a $50 green. I also was looking to. I am paper trading for the. I am paper trading for the. What is it for the the Heikinashi stop out method. Right now, I'm just using swing low. One of the things you'll notice about this here, and you can notice on your contracts, if you're watching your contract chart as well, didn't put in swing lows. You didn't get a lot of great swing lows off of that. So it was very difficult. Really the best you can hope for is, you've got a couple, I mean, especially at the shorter time frame, swing low here and maybe a break of support there as far as like setting a stop goes. And your option chart was very similar to that. So it's going to go. That's fine. You would have made money. That's fine. But that's the one time that would have worked, right? There's no edge in this move, right? For me, there's no edge. There are guys who this is what they live for. This is the trade they're looking for. That is their setup. They're looking for this to stay up here and just kind of move in that one direction. They live and trade for that. My setup doesn't process this. Okay. And I as much as I want to kick myself and be like, I need to tweak it so it gets catch that. This is one, right? The last time this really happened was like back in October. So it's like 2 moves in a 5-month period, 4-month period. I mean, that's not, you can't build a consistent trade thing off of 2 moves every 5 months. You just can't do it. So it wasn't my setup. That's all I'll say about it. I looked for it. I attempted one thing. I shouldn't have even attempted that, to be honest with you. And I kept the stops like so super tight. That's not my setup. That's all I can say about that. But you get this big huge move up, right? And that happens, and it's nice. If you got that, if you're a trader and this was your setup and you traded, fantastic. For me, it wasn't there. And it sucks. It's sad. You wished it would do it. But you have to let it go, because really, and through working and talking with Nick about things, there's a lot of this that involves conditioning, right? Like we're actually not becoming smart about the market. We're not trying to be intelligent about the market. We're not trying to think for the market or outthink the market or any of those things that I have actually thought that this fucking was. The whole idea of like think or swim, right? The idea that you have to think about this to find the opportunity. That's not where traders make the money. There are investors and their hedge funds and they put in these think tanks and have these like whole sort of things going on to try and make money in markets. And they're constantly running around in this hamster wheel, and they have large sums of money to do this with. We are not those people. We are the small traders. We are on an ocean, riding on jet skis, dodging between oil tankers. That is what we are. And so you when you're doing that, you have your wake that you can ride on up this side and down the other side, because that tanker is going to do that. And when that happens, we get the best lift, we get the best move, right? But when it's not that thing, it has taken me forever to wrap my head around the idea that when it's not that thing, stop trying to make it be my move. Stop trying to right? And this is where I think, the saying on Wall Street goes, bulls make money, bears make money, and hogs get slaughtered, right? That is really what they call that, right? Bulls make money, bears make money, hogs get slaughtered. And that's what makes me be a hog, is that when I start looking at this and I go, well, my setup could have been in there. I just didn't see it. I wasn't looking for it. It wasn't there, man. This is, I can show you a million other times where it starts this grindy shit and just nosedives down. I can take you back to there was one right before it was an FOMC meeting where you go to 400, you break above 400, you get to 401.5 right in there, And it's doing this. It's doing this real grind kind of stuff. It's not breaking out. It's not rallying. It's not running, right? It's not doing that. And sure enough, right off of 401.5, I mean, that thing went straight down at 393.5. And that can happen at any point in time. And that's why, like, my setup is designed the way it is because I know those moves can happen. I don't want to be in that move when it happens. I don't want to be there when the rug pull happens. And if I go back to, so we can go back here, I'll show you on the 4 hour exactly what I'm talking about. You go back to the 4 hour here. Okay. I'm going to take all of these indicators off because you don't need them really. MA, the Bollinger Bands. I got the EMA on for some reason. I don't mean to do that. All right, we're going to turn the MA on. Okay, so if you're looking at the slow stochastic, you can see this bump right over here where the slow stochastic just finally pops out of oversold, right? Okay. And this is a 4 hour time frame. This was from, if you want to go back and watch that episode, this is Operation 4 Hour. Okay. And here you're grinding out. You're grinding. Price action is not, it's not bullish. Okay. It's not bullish price action. You're not climbing over yourself to get to the next level. It's not climbing over. It's just grinding up. Okay. I can take you back into that. Get out. And I'm thinking in my mind, I'm going, okay, we're out. Should be getting the run to the 18-day moving average. Hey, this is fantastic on 4 hour. Go ahead, take my long position. And what just goes on and happens right as you come out? Boom. Rug pull right underneath that, right? And then again, you set that same sort of thing up here. Again, I'm looking for that move. Rug pull right on out. The red line, by the way, is your 18-day moving average. I have all the other ones on because weekend analysis, I'm looking at the longer time frames, and those require, for my setup, they do require larger time frames. Okay, so again, you can see here where even then, you know, there's an element of this that I needed to look at, which was price action, that would have defended me, right? It would have defended me in this in this on the 4 hour time frame. And because I wasn't really interested in price action, I was kind of counting on this one signal to make something happen. And they pushed it right back into oversold. They re-embedded right back down here. And then they were able to finally Thursday, Friday break out of that. But at this point, right, at the point that the daily's out, you're at the 18 on the 4 hour, right? There should honestly be normally, and this is part of the reason why I don't really do anything here. Normally, when you get here, the 18 on the 4 hour, you should be putting in a rejection candle. You should be selling. The idea that this just kept this straight up move here, this is what IRA teaches as a vertical price rise. Okay. This is not, this is some type of correction in the market. It's some other sort of thing like that. And it's really, if you have a setup that trades them, fantastic. You did very well. Congratulations. You made lots of money. My setup does not do this. Okay. My setup really tells me to get long after this rejects at the 18, right? It should have a pullback into some type of support down here. And that this continued move straight on through that I have no caveats in this. I have no look. I have A+ scenarios. I have scenarios for gaps. I have scenarios for I have scenarios for gaps, different catalyst plays. I have scenarios, and I call them scenarios. Is probably the wrong word. My setup has a range of things where it works. Okay, where I use it and it works. And as of right now, it has an 84% win rate. And depending on how I use my stop loss at this point, it's gone back to almost the $7. I'm like 7 and change to almost $15 now win loss rate when I follow the setup. I lose when I do not follow setup. I lose massively. It is horrible. It is very bad. So I've managed to even tighten up those stuff to where I'm just right around around 2-to-1 win rate at an 84% winning trade rate. Okay. Again, when I follow the setup, if you go back over the last couple of months, you will see many episodes where I have talked about and I didn't follow the setup. That is the truth. And any losses that I have incurred are because I didn't do the setup. Right. And but this can be a psychological motherfucker, right? It can get you because you see that move and the greed in you wants to trade that. Here's the deal. If you trade that, if your objective is to be disciplined to the setup, right? If that's my objective, that is my goal, right? I shouldn't talk about this like I'm talking about how you do it. You do whatever you do. This is how my objective is. My objective is to become disciplined to my setup. Okay. That is it. That is all. That's all she wrote, right? The best bet I could have hoped for is a long play as the 4-hour came out here. Okay. That was the best play I could have had to the 18. That would have been my profit target. I would have taken profit. That was it. That would be all. And that's and this becomes very hard because notice these two candles, each of these two candles is a daily candle. Okay. Each of these two candles equals one trading session, especially for options in the 0 DTE. Okay. This move didn't really happen. It didn't really transpire until way late in the day. Okay. So this second move, like this first one, you get the green candle. Okay. You start coming out and then you start making the move to the 18-day moving average. And the thing is with my setup, first of all, the big move doesn't really happen till late in the day. Power hour, I have nothing to go on there because in power hour, you can get wrecked on 0 DTE. You can just, even with this, there are guys who had this move, they hit their strike and they got wasted, right? I remember watching this because I was on this. I'm watching the 400s, right? And you break up to 399 in this area on that day. And I just remember them going up. They're up to like 32 cents, 34 cents, and they've come up from like 14 cents. It's a 20-cent move. You got 50 contracts, you have 20 contracts on, right? You got 20 contracts on at 14 cents. You're up $1,000 pretty easily. Or several $100s anyway. And then in the last minute, it proved that it wasn't going to go to 400 at that point. And those $400 strikes just nosedived. I mean, I shit you not. It was 1 minute. They went from like 32 or 34 cents all the way down to like 8 or 9 cents. So you are in this massive race against time in that last hour of trading. It's so dangerous. And I have been just wiped out in that. So pieces of my setup are there. And some of those things are, we don't trade power hour. There's too many things that can happen in that last hour. There's too many guys making decisions that are, and every power hour on Friday is always different than power hour on Monday and power hour, right? All of those, you guys are turning margin. You've got shorts covering. They don't want to pay the lever. They don't want to have the maintenance over the weekend. You've got tons of stuff going on inside of that last hour that can just wreck you. And so I have been able to mitigate a massive chunk of my losses, right? And it's funny because they've transferred from when I started not trading power hour, I was able to cut my losses down easily 50%. Now it sucks because the dollar figure rolled over into how I somehow trade and behave when I'm not trading my setup, when I force trade or revenge trade or do something like that. Somehow I've managed to roll those losses into that. But what I have had happen is this isn't happening to me during power hour anymore because you get wrecked. You can get wrecked. And they are purposefully doing it. Just, they are waiting till the end of the day to make these major moves so those contracts don't pay. And that is something that I am seeing repeatedly, and I am just kind of assuming, and again, that's actually kind of an assumption, but I'm pretty positive they are waiting till the end of the day to make the major moves so those contracts will not expire in the money, right? Or so that they won't be very valuable, right? And there's a lot of it. You can make a whole dollar move in a zero DTE contract, right? And I'm not talking about a whole dollar in the premium. I'm talking about you can see a whole dollar move on SPY, right? Let's say you're trading at 400. Let's say you've got the 403 contracts, right? You can get the move to 401, and that will pay you something, right? That will pay you. You'll be up something. If you got 10 contracts on, you'll probably be green about $100 in a $1 fast move. Okay. You can get a 25-cent move in the opposite direction, a counter move off of that. And what that can do for you is that 25-cent pullback is enough to yank all of the power out of the move you've had. So now you're at 475 cents. Sure, you're still trending in the upward direction, but that 25-cent move just wiped out the $100 worth of profit that you had, right? So now you're waiting for that next move to 402 and a half, right? You get to 401, you go to 402 and a half, and now at 402 and a half, you got your $100 back maybe, but you had a $1.50 move that basically wiped you out. You've now had to sit through two very treacherous periods in which it could have easily gone the other direction. It could have easily stopped you out. And at the same time, you wind up making the same money twice, right? So if each of those moves takes 15 to 30 minutes, you've just wasted it's taken you 1 hour to make that money, or in a lot of cases 2, 3, 4 hours to make that money. So you're really not capitalizing on your time with some of that. That's really difficult for especially for me. And so a lot of that's kind of why I'm like really leaning a lot into like figuring out my stop loss and where and how to place that I'm not making the same money twice. So off of that. Anyway, so again, complete vertical price rise. It was incredible. And so preparing for this week. Okay. Again, I have no predictions at this point. I have no idea what to expect going into this week. I have nothing. This is a vertical price rise. What IRA teaches is when you get this move, when that move typically happens, it is met by an inverse move of equal proportion in the other direction. Now, that's one thing that IRA teaches. That is not my setup. Just because I say that, I want to be very, very clear. Even if that's the usual thing that happens, this is not my setup. None of that is my setup. Okay. My setup is very simple. Coming off it's for spotting the reversal. That's the opportunity. We are looking for the slow stochastic to come out of oversold, or we are looking for the slow stochastic to come out of overbought. Okay. That is where you're at. Okay. And here, this is where, and this is why. Okay. So let me show you this, because this is a lot of the contingency stuff that I'm dealing with in this. Okay. So you can see that I had a setup into this where we were able to ride the momentum down. We were able to short off the top of that green candle there. Was very wonderful. Great trade going through here. A little bit of rocky stuff going through here. And here is where you're at with this, is that the first couple of days you're down here, you're free to trade counter trend. Okay. If it presents itself. Okay, so on shorter time frames. But after you got 3 days in this bad baby, you're looking to really trade in the direction of the trend. And that's probably where I missed this one right here, where the 4 hours coming out, and should have gotten a short into that. Doesn't really matter. I'll just make a mental note of it. It's not. I'm trying not to be the woulda, shoulda, coulda guy, because whatever trade setup presents itself tomorrow is different. Okay. It's not Friday. It's not Wednesday. It's not, it's not the same trade, right? It can be the same setup, but it's a new trade, right? I am not the not catching this move guy, right? And if I am the not catching this move guy, it's because it's not my fucking setup, right? So the thing is, looking at that happens. Congratulations, but it wasn't my setup, and being able to say that is so super important. You only had one line out of oversold. That doesn't work for me. It doesn't. And anytime I did that move on the 4-hour time frame and got smoked. So both lines have to come out of oversold. Both of them have to. If that doesn't happen, it's not my fucking setup, right? And even furthermore, very well, you don't know if it's a trap. I don't know if it's a trap, right? I have no contingency on that, right? I just know that it is not my setup because you only had the one line out, and it made the move anyway. Had both lines been above 20, I would have been very well off. I would have been very happy with that trade. I would have been able to hold that very comfortably, but it wasn't there. So anyway, and I think it is here. Hold on, I got to zoom in. Yeah, look, man. The price line is still at $17.96. It's still way below 20, right? So what can happen here with that lower line being below 20? The Bears are pretty easily can shove that back down. Okay. And I get it. As long as you open up here in this area in the morning, as long as you open up here, that will come out. But it's already made the move. So any trader who trades this setup, they're not going to be looking to buy. They're not going to be looking to get in. Does it mean there's a short setup for me? No, it doesn't. It doesn't mean anything other than that wasn't my setup. So I'm really trying to dial into this and grab this and accept the fact that the money you're not making is intentional. It's on purpose because it's not your fucking setup. And I'm really trying to drive into what is my setup? Do the setup. Just do it and stick to it. My setup has an edge. Without that, I don't have the edge, and I knew it, right? Watching that grind up all day on Friday, I knew that there was no edge in that I had no chance that I was going to be able to drive or execute that trade perfectly. I had no clue that I would be able to do that, right? I would be guessing the whole time. I would be back and forth in my head. Is it going to keep going? Is it not going to keep going, right? Oh, no, I took profit too early, right? I'm going to get myself into a whole thing that isn't how I trade. It doesn't work. It doesn't work for me. And it's not what I'm trying to develop. So, and again, I'm going to lay off of that. I feel better now that I've sort of been able to, I've been wrestling with this all weekend. I've been trying to sort of combine all of this and figure out whether blah, 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 blah. Here's the deal. You're at the 18-day moving average. You're kind of out of oversold. And the thing is you've got two options. Momentum can go up, right? You've got momentum that can go up, and you can get a break above the 18-day moving average. Now, that does open up setups for me. It opens up long setups. Very good, awesome, successful long setups. But you have to have the break above the 18. Okay? This gives me, and I'll wheel this back. Okay? Okay, so on here. Okay, so we go here. Okay, go here. Okay. So for all intents and purposes right here, in your intermediate trend, you are in an uptrend, okay? You are in an uptrend. You have low, higher low, higher low. Okay. You have higher high, higher high, higher high. Okay. You have high. You can go back to here. You go lower high, higher high, higher high. Okay. You have an uptrend. So a break above this 18-day moving average. Okay. Opens the door for higher price targets, the 418 and above. Other thing that you have that is actually pretty cool. You have the 100-day moving average coming up over the 100-day moving average. Okay. Now, this is not typically part of my setup. This is just kind of a little bonus. It's like a nice little thing. Okay. So you have this coming up over this, right? We get a break above the 18-day moving average at 404.60. Okay. Get a break above that. Find support up there. And this is coming up. What I have been taught is that means this previous high at the 418 level will be taken out. Okay. Now, does that mean I'm just going to go in and buy the 418 calls and be like, all right, just hold it forever? No, because that's not my setup, right? That's not how I trade this. You may be able to do that if that's your setup, if that's how you work. But I can know that we are going to tend to trend in that direction with this thing happening, as long as we get over this 18-day moving average. Okay. As long as you get over that 18-day moving average, I have a setup. I will have my momentum up. I will have my trend up. I will have my bias in the long direction. Okay. Pretty cool. But if that has to happen, we wake up tomorrow, you're over the 18-day moving average, I will have long setups going all over the place. Reject off of that, and you create a new thing. This is where I'm at that makes this really cool. Is I've really only got going forward this one sort of possibility as far as how my setup works. Okay. Reject here at the 18-day moving average and start heading lower until this low here at 391 is taken out. I have no more setup. Okay. What you will have off of a rejection of here is you will have a pattern of higher high, higher low, lower high. Okay. So without a break of the 18-day moving average, I have nothing to really go on. So that's something I'm going to be looking out for tomorrow, is that really noticing when I don't have my setup, right? And that really it's very clear. Again, a rejection here of the 18-day moving average sets me up with higher lows and lower highs. It completely wipes out my trend. It puts this into sideways action. And especially for 0DT options, sideways action's the devil. It really is. It is the black hole of money. And you can see it. I a lot of the places I tend to lose are right in here, in that. Lost a shitload of money back here. If you remember my $1,000 loss video on that one, that was pretty nasty. You can even see I lost a bit of money going through this thing right here where we're sideways at the top. Here, not so bad. I started working with Nick through a lot of this and was able to do fairly well back through the beginning parts of January, as far as all of that stuff goes. So it wasn't too bad. But again, this is kind of the idea, just knowing where you're not in a setup here, right? You have the potential as of right now for a higher high. I just can't get long until you're over that 18-day moving average, and then we go to a shorter time frame and we look for the slow stochastic to make a similar sort of setup into that. And then at this point, there's no real short setup for me until that low at 391 gets taken out, especially on the daily time frame. So that's kind of where I am with it. And that's kind of how I'm looking at the chart. That's how I'm thinking about things. We'll see. I'm going to back out and see if anybody is in the live chat really fast. See if anybody's over here. Okay, let's see. Okay, so that guy's got to go. So, associated death. If you're not a bot, I'm assuming you're a bot, but I'll say this. I don't want to grow this channel. Don't ask me that. I don't want to grow. I don't want followers. There's a few people I do these videos for. One of them is me, but no, I don't want a big channel. So no, I'm not interested. Anyway, that's going to do it. I guess Nick's not here. None of the other guys made it around. So anyway, thanks for, if you are watching, thanks for watching. Bit of disclaimer for you. If you're looking at this video, watching this video, consider it basically much like you would a student producing a book report. Feel free to give me a grade in the comment section, A through F, on my book report, what you think about my thing. I'm sure there's plenty who disagree that I should have done something on Friday. I personally, I've chased those and it's never ended well. It's never worked out well for me. So I am completely fine with respecting the fact that that really wasn't my setup. All right. Russell Journal, written, edited, hosted by me, Russel Liss. We're produced by Social Media Shows. Our executive producer is Maria Pereza. And until tomorrow, pretend I said some type of catchphrase.
This show is brought to you by Michelle Kubiak with Berkshire Hathaway Home Services. If you're looking to buy or sell a home, call Michelle at 702-683-6576. Her license number is S.48606. This show is also brought to you by Hand and Stone Massage and Facial Spa, located on Silverado Ranch, here in Henderson, Nevada. Restore, relax, and refresh. Let's not forget.
Welcome to Social Media Shows. Have you been watching social media shows recently? Of course you have. We have been live streaming for 4 years across social media platforms. We produce over 70 shows with over 1,000 episodes. In the process, we've helped over 100 creators realize their dreams and start their own show. We give platforms to promote your business. If you are an artist, if you have an event, if you are entrepreneurs, or if you have a story. If you haven't done it yet, go ahead and subscribe and follow us on major social media platforms. And if you have a great idea of a show, join us. Social media shows can help you produce and live stream your own show. Let us help you make your dream become a reality.
Hello everyone, this is Joseph Skoda with Social Media Shows. Well, I thank all of you for your support through these last several years, and it's been a lot of fun. We've given people a voice they never had before. Now, Social Media Shows is always collaborating with our veterans to help them do things and help out the veterans who are struggling today. And we teamed up with GI Connections, connecting veterans with resources. So please consider helping and donating to this great cause, because we're always doing things for veterans. So GI Connections, Social Media Shows, and you is what makes the world a better place. Once again, Joseph Skoda, proud United States Air Force veteran.